Thank you, first of all, Beta Alpha Psi, for having me coming back to campus in a way. We didn't have all this, so this is really, really exciting. We also didn't have the ability to partner up with entrepreneurs. That wasn't a thing back 35 plus years ago, okay? I look young, but I'm actually quite old. But anyway, so I'm excited to share with you where I've come through my journey from UH all the way to what I do today. And one of the things that I'm really passionate about is teaching people, students, and people who are coming up through accounting or through business, how important it is to look at the world in a different way, which is the real world, not just what you're learning in class, but taking everything around you, putting it all together and making it so that you're valuable as an asset, as an employee, as an entrepreneur, as someone who can make an impact in the world. So I'm hoping that today's session is more eye-opening. It's not going to be your normal accounting session, okay? We're not going to talk about debits and credits. Well, actually we are, but in a different way. So those of you that are in accounting, I need you to open your minds and not think about it in your traditional, I'm in a textbook class accounting. And those of you who hate accounting or numbers and really don't get it, open your minds to think of it as, how can I utilize what I'm going to learn today and maybe make friends with these accounting people to help me do better in either doing business, being in business, or starting business. Okay, so if everyone can do that, that would be great. Let me give you a little bit of background on myself, though. Thank you, Caitlin, for letting me, giving me a nice introduction. Right now, I'm a consultant. I have my own firm. I also work with other consultants. I specialize in growth and expansion strategy. Now, that's as far away from accounting, traditional accounting, as you can probably get, because we do mergers, acquisitions, transition, succession, and I'm throwing all of this out at you. But the reason I'm doing that is that's where you can go. You're not stuck doing bookkeeping or accounting or just doing office jobs or being just, you know, this person in an office that does what people tell you to do. This is your starting point, especially if you take this opportunity to learn how to do entrepreneurship and open your mind, to do way more, to be the president of the company, to sell your company, to bring your kids up and they take over your business and you grow businesses in Hawaii. And that's why I do what I do. I try to help businesses, business owners, and those who are coming up through the businesses, take over the businesses, manage the businesses, grow the businesses in and out of Hawaii. And that's what I hope. I will give you a little bit of a thought that one day you'll do the same. Okay, so we'll get started. But I must say, the first 20 minutes are going to be hard. It is going to be about accounting, but you'll see it's going to be a little bit different. Oh, and we also had some technological difficulties. So my friend Tracy right here from PACE is going to be clicking, and I'm going to be utilizing my notes over here when I need it. So it's going to be kind of an innovative presentation, okay? Okay, any questions? First of all, though, let's get a show of hands. Who's an accounting student or in accounting in here? Raise your hands high, because those of you who aren't, make sure you notice. Okay, who's in business or are entrepreneurs or trying to be entrepreneurs? Raise your hands high, you should be proud. You're the risky ones. And who's here that's not in accounting but came to learn about this? Okay, awesome. That's great. That's great. Okay, so we only have about an hour to get through this, and we have a group activity. So I'm going to be rushing through this. If there's anything that you have as a question, you can write it down or come see me after if I can't answer you during this presentation, only because we're really pressed for time. And you'll see why, okay? Okay. Today's agenda. Oops. So we'll go over quickly the fundamentals of accounting, key accounting components and concepts. We'll mainly use the balance sheet and the profit and loss and income statement to talk about the difference between traditional and entrepreneurial perspectives on accounting. We're going to do a group exercise where you're going to tie it all together. I know this sounds like a lot. And then we're going to do a really quick 5 minutes on how you use financial modeling to then also do better in the way that you bring those two together. And then we'll take some questions and answers. And we'll actually do that all in an hour, supposedly. But anyway, we're going to try. So the main thing is keep your minds open. And remember, this is a different perspective on how you look at accounting. Okay? So those are the three things: building on your fundamental accounting knowledge, introducing basic financial modeling and forecasting, and utilizing an entrepreneurial mindset. So can someone tell me who said accounting is the language of business? Nobody? Anybody? Yes, and you win. Something. Yes, he did. And accounting is the language of business. And the reason is, without accounting, you cannot, or well, it's the best way to determine the financial wellness of your company. And it gives us a comparative analysis to see how companies do in business, which most of you know, as well as against each other, as well as standalone, as well as for different purposes, for managerial purposes, for venture capital purposes, for regulatory and compliance purposes, and for lollipop purposes today. So thank you, Tracy. Swag? No? Okay. Okay, what's the difference between traditional and entrepreneurial thinking? Traditional, compliance-oriented. You're reporting, you're using historical data to report what happened. So you're reactive. You're looking at things that already happened, okay? From an entrepreneurial perspective, it's growth-oriented. You're looking to grow. You're looking to drive business. You're looking to look forward-looking in terms of what's going to happen. How can I adjust my thinking? How can I adjust business so that we can drive business in the way that the owners or ownership stakeholders want, as well as how do we work efficiently, effectively? Looks a lot different than looking at it as how did we do yesterday, right? We're still using the old financials, meaning the traditional, but you're using a growth-oriented, forward-looking thinking when you're looking at financial statements. So how can you do this? Oops. We're both doing it. Okay, click. So, no, go back. Okay, let me click. I'll click. I can do it. I don't need to look at my notes. It'll be okay. Okay, so if you think of traditional, think of it as a round sugar cookie. Anyone can make a round sugar cookie, right? But who can make a chocolate-dipped shortbread cookie in the shape of a pineapple, make it successful, brand it, market it, and sell it all over, including on Hawaiian Airlines? Entrepreneurial. See the difference? So when we talk about accounting, that's how we're going to look at it. We're not looking at anything illegal. All we're looking at is taking a traditional concept and looking at it in a different way. Okay? Sorry, Trace. I got it. I'm just clicking. Okay, so we're going to look at assets and liabilities, equity and capital, revenue and expenses, a little bit on cash flow, as opposed to, we're going to be looking at more from a cash management standpoint. And when you read financial statements, because we only have an hour, we're going to do this really quickly. What does it mean? How does it interrelate? How do we think about it from an accounting standpoint and from a business standpoint? Am I going too fast? Okay. Okay, so the first one is, of course, the accounting equation. All you accountants know this. We're obsessed with balancing. Debits have to equal credits. Assets equals liabilities plus equity, right? We know all this. Most of you know all this, right? Okay, so we also look at cash versus accrual. How many of you are in businesses or know businesses that are using cash basis accounting? Most of you know this, because sole proprietors and smaller businesses, and you'd be surprised how many businesses still use cash basis of accounting. And the cash basis of accounting, for those of you who are not familiar with it, is you report revenue when you receive it, so when cash is in hand, and when you pay for something. So it's quite easy, right? Oh, received money, revenue. Paid it out, expense. Accrual uses two different principles. Accrual is you recognize revenue when it's earned. So even if you don't have money in hand, even if you never get paid, well, hopefully that doesn't happen, then that's a whole nother scenario. But anyway, once you earn it, you have to recognize it. And then on the expense side, you have to match that with the revenue and when you incurred the expense. So say you don't pay for the expense till 6 months out, but you did the work, you already bought the materials, you used the materials, even if you didn't get paid for it, and even if you have to, okay, I'm talking too fast. Anyway, when you incur the expense is when you earn the money, okay? So you accrue it Did I just say that wrong? Anyway, sorry. I'm going too fast. Okay. Historical cost. Everything in accounting is recorded on historical basis, on what you paid, okay? You're hearing right now, there's this whole argument. I'm gonna just throw this in here because it bothers me. Have you all heard of that new rule that they're trying to put in about taxing people on unrealized gains? Okay, so the reason you don't want that is even if it's the millionaires, everything drops down through history. It'll start with them and it'll start trickling down. What they're doing is saying, say you bought this bottle for $1, but you can sell it because it's a special bottle for $100. What they basically want to say is that $99 that you unrealized gain, you get to pay tax on, even if tomorrow it's only worth $2. So you don't want stuff like that. So in accounting, we try to be conservative, right? We try to say we're not going to overstate things. So when you talk about taxing unrealized gains, what does that sound like? You're overstating a value that you don't know. So when we talk about mergers and acquisitions and sales of businesses, I oftentimes have owners say to me, well, I think my business is worth $5 million. And then they try to tell me why. And I say to them, that's great and it's possible, but actually your business is worth what someone is willing to pay for it. So if someone's only willing to pay $2 million, your business really is only worth $2 million. Does that make sense? Okay. So that's conservatism, right? You don't want to be saying something's worth 10 million or is 100 million when in reality it's a million. Consistency, that's so that when you look at your financial statements over a period of time, it's apples to apples, right? If you are consistent and you're reporting in the same way, you can match things up. But if you keep changing things up, changing concepts like saying something is, let's see, I have to think quickly. Oh, the other thing I need to tell you is I just flew in from Los Angeles last night, so I am running on fumes. So you have to excuse me if I can't come up with everything right away. So sorry. But anyway, what was I talking about, Trace? Consistency. So from month to month, you want to be making sure that you're reporting consistently so that you can match it up. Because when your boss says, why is June different from March? If all the way that you're reporting is different, it's much more difficult to explain differences, to see issues, to figure out how you can do better, okay? And going concern and materiality. Materiality, accountants love saying, I need to be in balance and I need to find the 5 cents. No, you don't. Okay, you have to be material in terms of thinking about what truly affects your business. So if you're in accounting and you're sitting there spending an hour on figuring out what your $1 is off or $5 is off, no. That's not what we're about in business. What you're looking for is making sure, yes, you want to be as correct as possible, but if it's not material, you move on. What affects your business should be material to the business. Does that make sense? Okay. Going concern. That's the other thing. When you are doing reporting, you generally assume that a company is a going concern. But in reality, with the pandemic, what has happened is there are many businesses that are not going concerns. And I work with many of them in wind down situations. And you don't want to be in that situation. So we'll talk about that a little bit more later. Am I going too fast? Okay. So assets, balance sheet, everybody. That's what we just talked about, right? Assets equals liabilities plus equity. So this is the asset side. We're going to talk about the sugar cookie real quick. So as you can see, it's broken down into current assets and non-current assets. Current assets generally are a holding period of 1 year or less. And non-current assets are things that you hold that you see on the balance sheet from year to year often that have a holding period of over a year. Okay, now let's get exciting. Oops. Okay, that's not the exciting part. The chocolate cookie. Okay, now I'm going to take a little bit of water because I need to slow down so I can explain this. Who can tell me what accounts receivable is from a traditional sugar cookie perspective in one sentence? Accounting people. Okay, I'll let you off the hook. It's when you provide a service but you haven't been paid. We're talking about accrual basis, okay? Well, actually cash too, depends how you look at it. But anyway, okay. So you've done something, you've done a service or you've sold a product, but you haven't gotten the money yet, right? That's what traditional accounting looks at for accounts receivable. Now put on the sugar cookie. Think about the sugar cookie. What does that really mean? What it really means is accounts receivable is an opportunity. Okay, it's an opportunity. And I'm going to slow down on this because this is the first thinking concept. If you look at accounts receivable, what does it really mean? Those are your customers. Those are people who hopefully the reason they're on accounts receivable is you have terms, right? That you're saying, hey, these are the people who owe you money but are buying your product. So the first thing to ask is look at that list and say, hey, who's on that list? How often do they buy? Are they paying? Do they pay regularly? What are they buying? What do they do? Do I know someone other than the accounts receivable person? Do we know that maybe they're a possible buyer that could buy even more or even partner with us to do something that they might need in order for me to drive my business? Do you see where this is going? It's to continue asking the question and not just looking at it and saying, oh, so-and-so owes me this much. The the AR aging says we're owed this much. So do you see what's happening? Is as a finance person or a person in business, you're looking at these concepts and saying, what can I do with that on a forward-looking basis if I really delve into what does that mean? It's not just a category. It's not just a chart of accounts item. It's an item that you can actually shine in if you're in finance or accounting or ops or whatever by saying, wait a minute, did we look deeper? So let me give you a real world example. There is a company I'm working with right now that is trying really hard not to be in a wind down situation. So the question I asked was, it's a construction company. So this is a little bit more difficult, okay? They use percentage of completion. The faster a job gets done, right? The faster they get paid because they can bill. Then they also have to make sure that they're going out and asking for that money, right? Getting paid on time. They also pay their subs quicker, get them out quicker, have less time, hopefully from the subs. Hopefully they have something in the agreement that doesn't say it's this amount only, right? But it's the movement of that, right? And it's the thinking, working with the operations people to say, what can we do? And not just saying, oh, this is the margin, this is when we're going to get paid. So you see the difference in the thinking? Because if the chocolate cookie people thought like that, do you think they'd be in business? No way, right? They really had to think about how they had to be scrappy enough to get even the mold to do pineapple cookies, pineapple-shaped cookies. So in the real world, it's not just about accounting for stuff. It's about thinking about it. And that's what you need to do. And you may not get the light bulb right now, but you will one day. And one day you're going to say, remember that crazy lady who talked like 50 miles an hour? That's what you're going to realize because it's all going to come together. It may not right now, but I'm just planting the seeds that as you look at this stuff, because your teachers are not going to teach you this. Your professors are not going to teach you this. But this is stuff that you can learn in real life today and think about so that in the future, you're more valuable. Okay, let's try another one. Property, plant, and equipment. Sounds easy, right? Buy something, buy a bottle, make something, buy the printer you need. So here's another example. I just had another client that said, I want to buy a $650,000 printing press because they're in production, print production. And I looked at them and I said, why? And they said, oh, because it has all these features. It's awesome. It's the Cadillac of this, blah, blah, blah. And I said, how many of your clients are still buying print production products? How many of them have changed from printing to digital distribution? How many clients do you still have? How many new clients did you bring in the last year? I sound like a salesperson, right? But I'm not a salesperson. I'm an accountant. I'm a CPA. I'm a business strategist. And it's that thinking, okay, well, what could we do with that $650,000 instead of buying, leasing, financing, making myself stuck to a 5-year or 5-year lease or buying it outright and or paying for a loan or financing. What can I do with that money, right? Lots of stuff you could do with $650,000, right? So that's the kind of thinking that we're going to ask you for in the business world. We're not asking you, oh, how much is in property, plant, and equipment? What we're really asking is, okay, what can we do in business? What can we do with these numbers? What can we do in the real world to do better so you make money, we make money, the community makes money, Hawaii makes money if it's a Hawaii business, right? Any questions yet? Okay, makes sense, right? Okay, let's do another one. So liabilities, right? Same breakup, which is current liabilities, accounts payable, usually with a year or less holding period. How are we doing in time? Okay. Non-current assets, non-current liabilities, those with a longer holding period, okay? Things that are over a year. So it's usually your non-current portion of like notes payable or loans payable, things that are not going to be done within a year. Okay. So let's quickly go to this. So we're going to skip accounts payable as an example. We're going to go into deferred revenue. I won't ask you. Deferred revenue is revenue that you receive the money for that you have not provided the service or product yet for. Okay? So generally accountants will say, you can't use that money because we have not provided the service. We have not provided the products yet. Instead, maybe, okay, and this is a maybe. So this is where risk is involved. This is why communication with those on your team and really understanding your financials is important because you still have to pay for whatever that was that you provided or provide that service. But could you, say you were in the middle of creating plumeria shaped cookies, but you just needed a little bit more money in order to finish it, and you already have contracts that are going to generate revenue, and therefore you will get money to be able to pay for that service or product that you have not provided yet. You might weigh that risk and you might say, hey, we have this coming. This is when, this is how close you guys say you are. If I provide you with this money, which we have, will you be able to finish this? Will you be able to get us the money to pay for what I need to pay for and still be okay? Maybe, maybe not. The other thing I also have to tell you about this kind of thinking though is you will, in many companies, be laughed at sometimes. So you have to be able to communicate it well. You will, because change is hard, not get all of your questions across initially, but you persevere. Because if you can show why, and you can show the accounting basis why as well with the numbers, people will start to take you seriously. Because today's world is different. It's not like before where we didn't have access to the ability to show why and how things work differently. It was much different when we were younger and we didn't have the internet. Yes, we didn't have the internet. And everything was on paper. Okay. Any questions so far? Okay. Oh, we did the cookie already. You guys got the cookie, right? Okay. Equity. So this is where it shows the book value of the worth. But we talked about businesses are really worth what people are willing to pay if that's what your exit strategy is, to sell, which most people think that that's their exit strategy. Okay. We're not going to really go over this because we don't have time, but it's generally some other things to look at though. If this amount is really, really high and you have a lot of money in assets, generally you're looking at they were probably not using their capital well. There are probably things that you could do to really leverage and do better with the company. So just keep that in mind if you see this being really high and your assets really high. Cash, especially cash and investments. Okay, revenue and expenses, this is your P&L. So you have your revenue, cost of goods sold, gross margin. Everyone knows what that is, right? Operating expenses and net income. And then you have SG&A or operating expenses, depends what they call it. And contrary to popular belief, they don't call it the same thing in every company. So don't expect to go in and say, hey, that's supposed to be SG&A. They might laugh at you. Just go with it, look at what they're doing, and slowly change things if you can, if it's necessary. But for the most part, you go with what the company and the owner has set up. Okay. We're going to skip the cookie on this because we need to move forward. Driving your business. What do you have today that can enable you to take what we just talked about and do better? You have research, market data, trends, online access, updated systems, point of sale systems, integrations and accessibility, and artificial intelligence. I'm going to warn you on artificial intelligence. The reason accounting, all you accounting students, why it's really important for you to understand accounting and do this is that just because there's QuickBooks, just because there's AI, just because there's things out there that can do accounting, they don't understand what's below that, how it's done. And in the real world, that's not good enough. So if you're using AI as your crutch right now, I would encourage you not to do that. Use it a little, maybe to help create your paper or whatever, or start your stuff. But understand the accounting fundamentals or the business fundamentals, because it's not going to do you any good to ask AI to tell you every time how your business is doing. Okay, it's a great tool, but it is not a substitute for understanding the fundamentals. Okay? So what I wanted to tell you on this is, so this is the entrepreneurial side though. This is the adding in of this stuff. Technically, traditionally, we use this in accounting. And you may not know this in accounting right now in what you're teaching. I'm not sure what you're learning. But these are your more traditional side of things versus that side is all the things we now bring into this side. So I'm going to give you an example. Old school, way before your time. Before there was the data that once you walked in the room, it counts how many people come in, how tall you are, what your gender is. It gives you all that data. There are systems that now do that. When you walk into Macy's, cameras everywhere, and they're not just watching you for security purposes. They're taking whether you're an adult, whether you're female or male, what area of the store you're going into, how often you're going there, and is it converting to a sale? I don't know if you knew that. You all knew that, right? Right. Okay. Well, anyway, back in the day, if you wanted to expand into another location or buy another business, you actually had to go to the location, sit down with a clicker, and click all the people coming in for an hour. You click, click, click. Then the other thing you'd do is you'd watch what they're buying. And you're logging it down while you're pretending to eat, if you're a restaurant business. And then you're calculating based on what the prices of everything was, what their revenue was. Nowadays, you have all that information, right? You can get it, buying it, looking at different things that are available online, asking chat. And so you can add all of that, including now systems are so much more robust. If you're a data nerd like I am, you will love the systems that are out there because you can get so much data out of it and you can really get insights and add that to your accounting background or your business background and actually drive results. So you'll often hear marketers talking about conversion. When they're talking about conversion, they're talking about clicks, people clicking through to sites. Your conversion in accounting is sales, revenue. How much revenue am I actually getting? Okay? And that's really important. And then adding all the different things. What are the trends? What's in the industry? But really digging down deep and not just looking at what is your traditional accounting and reporting. Okay? And on this side, a lot of this you're going to have to do, though, in order to get, say, VC funding. They're going to ask you for it. But the more you can bring that in to support this side, the more likely you'll be to get VC funding, which I've also done in the past, too. Oh, I think I left that part out of my background, y'all. Okay, so one thing I needed to tell you. So back in the day, prior to what I'm doing now, I worked at KPMG as an intern when I was in school, and I stayed with them, okay? Then, when I left KPMG, I went to work at Cheap Tickets, which was a startup back in the day. When I joined them, they had about 80 employees, some locations in California, and I think one in Kansas City, and we made about $25 million a month in revenue, and we had 80 employees. When I left the company 8.5 years later, we had over 1,500 employees. We were across the country. We were almost $1 billion in sales. And we were one of the first travel consolidators on the internet. Okay, we did a private equity offering. We then did a public offering, a secondary public offering, and then we sold. After being on NASDAQ, we sold to a company on NYSE, New York Stock Exchange. Okay? So it's possible. That's what I meant to tell you. It's definitely possible that you too can do these things. Okay? If I can, you can. And that's where actually I learned a lot of this, to think this way. But I did not realize that I was thinking this way until I started helping other companies. Because in that company, they enabled me to do a lot of things, not just accounting, that enabled me to see the bigger picture. And that's the picture I'm hoping you'll see a lot sooner rather than later. Okay. Statement of cash flows, we're going to ignore. Most businesses that I work with, big and small, don't use that except for because they're required to report it. Instead, we use cash management. Cash management on a daily, weekly, or monthly basis enables you to keep track of your cash, ensure you know where it's going, and ensure that you're able to pay for the things that you need to and make the changes and have the flexibility that you need to do the things that you need to do. So I would highly encourage you, sorry we don't have time to get into it, but to learn more about cash management. Okay? I know. Okay, quickly. How to increase the bottom line. What are the 3 ways? Anyone? Okay, yay. Lollipop there, 1. What's the next one? Anyone? Can't hear you. What's another way? There's really only 3 ways. Nobody? Okay, increase pricing. Easy. Expand market. More markets, going into more areas, getting more market share, selling more product. 3rd, reducing expenses. The person back there said. Okay? Here's another one real quick. Remember this lesson, it's not one for one. So that printer, that $650,000 printer, the company that I worked with that wanted to buy it, it would have taken them $2 million in sales to break even just to pay for that printer. So think about that. We can't get into it right now, but if you take, on a simplified version, your cost of what you're trying to purchase or expense, and you divide it by the gross profit margin of what you're selling, you can kind of get to what you have to produce just to pay for that. So when someone says to you, oh no, it's just $600, it's not. Do the math, and that's what you need to communicate, okay? Okay. Traditional versus entrepreneurial. How much time do we have? None. Okay. Okay, we're going to skip this because we have to go. But in this one, I was going to throw out some questions and you were going to get lollipops, but we'll get lollipops to you anyway, okay? Okay, so we're going to do a group activity. So what I need, how many people did we have? Okay, get into groups of maybe 8 or 9. Make sure you have an accountant and an entrepreneur in the group at least. Multiple accountants are okay. So turn around. Once we start, I'll let you know. But this is what we're going to do, okay? We're going to use the entrepreneurial mindset. I know it's hard because we went over it really quickly, and today's concepts. And we're going to have you think up ideas based on entrepreneurial business ideas using that, what we just talked about. So thinking about it, okay, on how to grow an existing business. Okay? And this is the business. The business is doggygene.com, and it's a service. The service is gene testing for dogs. So we're going to give you some background information, and don't worry, it's written on the piece of paper that we're going to give you. And you're each going to be given an area, okay? Or your group's going to be given an area. You're going to use this information. You may use it, you may not use it. Basically, though, the thing to remember is you don't have to figure out how to do the gene testing. It's a third-party provided test, okay? And the proposed expansion areas, which you'll be assigned, are social networking, matchmaking services, wellness, spa, nutritional planning, and expressive arts. And there's a couple more. So your group will come up with 1 or 2 ideas based on what we talked about. So you have to dig deep, okay, because we don't have a lot of time. And you'll present that in 1 to 2 minutes. You'll just stand up and tell us what your ideas are, okay? But in doing it, you're going to use some of the financial information or something from the case study. We're going to encourage all ideas to be creative and proactive. And you can create and make up anything you want, but you have to provide the assumption used. So for instance, if you say, You're going to open 10 locations because you'll have to support that. Why? How are you going to do that? Oh, someone gave us $100 million. Okay. But is that realistic? Probably not. So, maybe don't use that. But that's what you can do. So you accountants, I'm going to tell you this now, you're the ones that are going to have the trouble with this. Even though you have numbers and case study numbers, coming up with the ideas to be able to do this is going to be a little bit harder. So that's why you need entrepreneurs in your group. Giving you a hint, okay? So you have 2 minutes to pitch your ideas once you do it. So we're going to have you turn around. You have 15 minutes, and then we're going to have you pitch your ideas. And then we're going to vote on the best ones. So, okay, you want to give them? We'll just asking for planning and decision making. We use that called spreadsheet, right? To forecast and determine. There are apps you can use, but you don't need that. You do it in your spreadsheet quite quickly. And the main thing I would say is your assumptions need to be spelled out. So, for instance, if let's see who said they're going to get sponsorships back there, right? You need to make that assumption. What are those sponsorships? Where are you going to get them? How are you going to get them? What are they going to provide? Because when you make a financial model, especially if you're going to give this to your boss or to an executive team or pitch everything, you need to make sure that the data that you put in is good. Because it's the same as in insurance. Bad data, bad offer, right? The last thing you want is to tank the company because you pitched something that we can do the work on and make sure that it was absolutely correct in all the numbers, and I communicated with everyone that you needed to. Okay, so models, that's the risk. Is you may not check. Okay, don't check my math because I did it really quick for this example. But this is an example of how you might do a quick spreadsheet. The reason you have all the yellows is this is where you input things that you're going to be testing. So for instance, in this case, I have assumptions at the top. 5% increase per month in test kits. 6.5% increase in networking add-ons. Matchmaking to be added on in 8 months, estimating at $50 per month, average at $75, a $75 fee. So what we do is we just model it out. Okay, pretty easy for all of you accounting people who do spreadsheets. And this is where entrepreneurs use your accountants or accounting friends to do this. And you set it up so that you can add in things that you can take out, change, correct. It's somewhat of a forecast and a sensitivity analysis for those of you who use this. Well, what it does is it enables you to see, at your bottom line, what is the impact? And in this case, if all of those things happen and we put it into this spreadsheet, theoretically, you're only coming $1, right? Probably not, but this is the high end. The another thing you would do is you take it down. Remember the concept we talked about conservatism. So you would do best, worst, and in between scenarios. Okay? And then, this one, I didn't give you all of it, but this would be the summary. This is what you would probably provide to your to start the conversation with the CEOs. What is the impact? Yep. Okay. Any questions on that? I know that was super fast. I'm talking. What questions? Okay, so how do I use this today and in the future? First, PACE UH Venture Competition. The reason I'm actually doing this is I've been judging for the last 8 years on, say, business plans and the initial round. And the biggest problem that entrepreneurs have is they are not able to do financials. They cannot provide the financial information, and they give a lot of assumptions without any grounded-based reality. So one of the reasons I'm doing this seminar is I wanted to combine you to know. So you could see that if you combine and you work together and learn from each other, it actually benefits everybody. And it benefits this competition too. And you never know. Because if you look at the way that my career went, I was able to do, and I'm doing today because I was able to take both entrepreneurial and regular accounting and not just be an accountant. I played a role in why we were able to do what we did and then I'm today. Thank you. So, PACE UH Venture Competition, see Tracy or any of the PACE staff if you're interested, right?
Yep. Every spring.
Okay, the second one is communication. You can know everything about accounting, you can know everything about your business, but if you can't communicate that, you are worth a lot less than you should be. The value in any business is the ability to communicate about it. Let me say that again. Okay, this is that important. You're all learning different things. You're in business. You're doing things. We all know this, but we don't take the time to really understand this. Communication is key. Take every opportunity to become a better communicator, written and verbal. Okay. How do you do this? Join a nonprofit organization. The reason I say this is they're not going to fire you. Join one, take a committee position, run an event, learn how to manage, learn how to talk to people. Especially those of you who came through the pandemic, learn how to talk to people, learn to read them, because in the end, ChatGPT and AI don't even get you so far. They don't read faces. They don't read the nuances and what is said. It's not going to take the place of that human aspect we have from thinking like a human. It's going to try, but it's not going to be able to do that. So the better you're able to communicate and be a leader in, say, a nonprofit organization or your whole organization, it's only going to help. Internships, take them, no matter, even if it's not in your field. Even if you're going to work in a different field or something, you're going to be a cocktail server or a host in a restaurant. Okay, that's okay, because you know what? You are communicating, you're learning about a business, you're learning how the money works if you're a cocktail server because you're doing tips. You're learning also about the tax system because you're now reporting taxes. You see all the things? So remember, thinking. Just think, guys. Open up your minds. Don't let people tell you how to think. Think for yourselves. Leadership. When you leave UH, when you graduate, nobody tells you how to be a manager. Nobody tells you how to supervise. They might give you the theoretical background, but to actually do it, you should practice it. So that's why I said nonprofit organizations, student activities, committees, Beta Alpha Psi, accounting club. Great opportunities. Take the step to not just be a member, but actually learn from it, because you'll need it in the future. Just because you think you're going to be a great manager doesn't make you a great manager. So practice. Theoretical versus actual, and be a sponge. So in the real world, theoretical, you live it. Actual, in actuality though, you have to learn from experience. And unless you're going to stay in an academic field, that's a different story. But if you want to go into private business, be a sponge, learn everything you can. Even if you have to go work and say you're working at the library over here, you're going to learn something. Pay attention, ask questions, do what you have to do, but make yourself more valuable, because I got to tell you, it's really hard to find good people in today's business. In all the businesses I'm working with, everyone has a shortage. Everyone has a shortage. And finding good people to be managers, to be leaders, and to rise up is even harder. So you're going to be well equipped and hopefully valuable enough that you'll get the jobs you want. You'll get that career change. But you gotta do the work. Okay? And that's it.